So, hello everybody. Welcome. My name's Claire Leach, and I'd like to welcome you to the Management School, where I have the privilege of being the Executive Dean. I'm absolutely delighted to welcome you to the fourth in our lecture series, our inaugural lecture series, and it has been. We were just actually talking a few minutes earlier, and it has been absolutely fantastic and really has surpassed our expectations. We've had fabulous folks coming to attend, so really good attendance, and we've had the quality, I think, of both our professors either promoted internally through our promotion system or they have been appointed externally, has just been fantastic. And I think we've all been really fascinated by the quality and depth of the research they have shared, as well as their stories to becoming professors. And these are really important as well, because I think they help inspire our doctoral students and our junior colleagues. And I think what we have really liked and has been a real bonus for us is that it's not just our academic colleagues, or indeed actually the colleagues from our own departments, but actually it has been a full school event with a lot of our professional services colleagues coming and making the time to come and enjoy the series as well. So all in all, it has been a wonderful innovation for us. So I'm really delighted to welcome you today to listen to Argyro Panaretou's story of becoming Professor of Accounting at Lancaster. And Argyro's work really focuses on improving communication between companies and sectors, and as well as looking at financial reporting and how that affects decisions and decision making in capital market participants and managers. So she looks at a range of data, but she is also focusing, and I suppose it's really not that surprising given the era that we live in, on the digitalisation of reporting and AI and how that can enhance our transparency and the accessibility of financial information, which I think is really, really important. And of course, there is a sustainability aspect to this as well. So what we're going to do is that Argyro is going to give her lecture now, and then at the end, I'm very pleased that our Associate Dean of Research, Professor Maria Piacentini, is going to facilitate the question and answer session. So Argyro, I'd like to hand over to you and look forward to hearing much more about your story, both your personal story and your career, and also your research story.
Thank you so much, Claire, and thank you so much, Maria and Sonia, as well, for organizing this. It is a pleasure to share my story with you. And thanks everyone for being here today. I will try to share my slides. So we should be able now to see this. Yeah, right. Okay, so you can, I guess, now see my slides. Is this is this okay, Sonia?
Yes, we can see.
So yeah, I have perfect. A little bit of an issue with the PC here, but okay, I think I can. Yeah, okay, excellent. So welcome everyone, and thank you very much for being here today. Before I share my journey to becoming a professor, I would like just to take a moment to express my thanks to my department and also the LUMS for their support along this way. I truly cannot imagine of a more supportive environment for this journey, and I'm very incredibly proud that I am part of this management school. So, as you will see, my journey is deeply connected to LUMS, as I first arrived here as a PhD student, and that was a long time ago. It was in 2005, and it was in the very accounting and finance department that I am now based. Before arriving in Lancaster, I completed a 4-year degree at the Athens University of Economics and Business, followed by an MSc at the University of Southampton. And I had a very good experience in my undergraduate years, because I think that's where I decided that that's something I like very much, and I would like to become an academic. So when I arrived in Lancaster for a PhD in 2005, it was really hard to imagine that 20 years later I would be still here, but here I am. It's on one way it feels that it's long, but on the other way it feels that it's just a very, very short period of time. After I completed my PhD, that was in 2009, I started as a lecturer in the Department of Accounting and Finance, and I was promoted to a professor in 2022. If I'm not mistaken, I think that was the first time, it was the first internal promotion of a female academic to a professor in the department. I think that was, if I'm not wrong, but I think that was the case. As you can see from my slides, I have been here the whole time with a break of a visiting position at the University of Michigan during my sabbatical. But I was a lecturer, a senior lecturer in Lancaster, and finally a professor. So I have been here in the whole academic career. I'm doing research in financial accounting, and it is a little bit challenging to make accounting sound very exciting for people that they don't do accounting, but I promise I will try. Accounting is not limited to applying simple rules to generate financial statements. The role of accounting is to provide investors, lenders, and other users of the financial information with useful information to support decision making. In many cases, summarize information based on underlying economic activities requires the use of forward-looking information, the application of critical thinking, and accounting judgment. And we know that better accounting information results in more efficient capital allocation decisions. Therefore, accounting has a very important role to play in the economy. As a researcher, as I said, I am working in financial reporting. And what I do is I'm looking at improving the communication between the entities and the investors. And I also look at how financial reporting regulation affects the decision of the capital market participants and the managers. Of course, as the economy and capital markets evolve, the informational needs of investors also change. So my research focuses on addressing these changing needs, particularly around financial innovation, digitalization, and sustainability. Okay, but let me take things from the beginning, because when I came here, I initially started my PhD in a more of a finance-related area. So when I started on my PhD, I was focusing on hedging strategies effectively. So my early research examined how entities use derivatives to protect from financial risks. What do I mean? I mean to protect from risks such that commodity price risk, exchange rate risk, interest rate risk, etc. This phase of my PhD was particularly valuable as it involved extensive training in pricing of financial instruments. And as you will see, while I'm describing what I'm currently doing, it is very, very useful. And while we could develop a theoretical model to determine what is an optimal use of derivatives, there was a significant challenge in the fact that we didn't know much about what companies do in real life. So were derivatives used primarily for hedging, to protect against those financial risks, or were companies also using financial instruments for speculation? And if they were hedging, what type of risks were they hedging, and in what extent? And there was good reason for this. it was very simple. For a long time, corporate filings provided limited information on the use of derivatives. Of course, this lack of transparency posed a problem because derivatives are highly levered instruments and their value can change very quickly. So, during a period of rapid financial innovation, when new derivatives and other financial instruments were constantly emerging, investors had very limited insight on how companies actually use those tools. And as I said before, accounting has a very important role to play in providing information. So it became increasingly important to ensure the timely and reliable disclosure of usage of derivatives and other financial instruments. And that was particularly important in industries that they make, that they use those instruments a lot. For example, in industries that they have exposures in commodity price risk or in the financial sector, right? We know that banks, for example, most of their assets are in financial instruments. So to meet users' informational needs for around the reporting of those, the use of derivatives for hedging, the International Accounting Standard Board introduced accounting standards regarding the measurement and disclosures of derivatives used for hedging. But also, those standards also provided information for derivatives that they were used for other activities, for trading activities. So the adoption of these standards became mandatory in Europe in 2005, and that was as I started my PhD. So I started collecting information on how firms use derivatives from audited financial reports. And in the next part of my research, I provide details on how firms use those derivatives, and I look at whether this the use of hedging is associated with benefits. And I show that it is associated with real benefits for the firms, and specifically firms that they hedge, they have higher market values. However, as I collect this data, I become increasingly interested in how the companies communicate this information about hedging. So, was the provided information enough? Could we do something to improve it? And in the next chapter of my research, I explore exactly this issue. I look at whether hedge accounting, which those are the accounting rules that effectively match changes in the value of a hedging instruments and hedge item in financial statements. In other words, is how companies measure and disclose those derivatives used for hedging. I found that hedge accounting rules actually reduce information asymmetry between investors and the firms. So this finding in this paper highlighted how accounting standards had evolved to provide more useful financial information to investors because of what I explained, this financial innovation and the fact that we had more and more derivatives in financial instruments emerging. This study is one of the first that look at real effects of accounting for financial instruments, for derivatives specifically. It led actually to my first FT50 publication, and it was recognized as one of the 48 most influential articles on financial derivatives published in accounting journals between 1996 to 2017. And at this point, I would like to thank Ken Pisnell for this. Ken, not only he provided me with fantastic feedback on this very first accounting paper I wrote, but he also very much encouraged me to submit it to a top journal. I remember telling him that, no one published so early in the career in an FT ranked journal, and he told me, well, if you don't try, you will never know. That's a nice paper, give it a go. And that's what I did, and it worked very well. So thank you so much, Ken, for this. that was great. So after studying accounting for derivatives, I became interested in the broader reporting of financial instruments. Financial instruments are not straightforward to report. They contain features that make their valuation process complicated and opaque to investors. Yet, we know that financial instruments can have a huge impact on financial stability. For example, not providing reliable information on financial instruments was blamed. Not able to, in fact, not being able to recognize losses in a timely manner in banks' financial statement was argued to have contributed to the US saving and loan crisis in the 80s, as well as to the Japanese banking crisis in the 90s. And accounting for financial instruments was also blamed to have contributed to the 2007-2009 global financial crisis. So not providing reliable information on financial instruments can have substantial consequences. Subsequent research focuses on financial instruments on a very fundamental debate in accounting, and that is how assets and liabilities, in my case, financial assets and financial liabilities, should be measured and reported in financial statements. Essentially, what I examine is what type of information best helps investors to assess the amount, the timing, and the uncertainty of an entity's cash flow. So what type of information we should provide to investors. These studies around the measurement, they focus on banks because banks are the main users of financial instruments. I will not go into many technical details on accounting measurement. I think this wouldn't be very exciting, but our findings show that when financial instruments are measured at fair value, meaning they're measured and reported in the financial statement at a value that is based on potential market prices rather than the original purchase price, they provide investors with more useful information. I have two studies there, and in the first one, we find that fair value measurement for financial assets decreases information asymmetry between investors, and that this effect is more pronounced when financial liabilities are also measured at fair value. In the second study, we show that measuring liabilities at fair value provides investors with useful information about the credit risk of a bank. So it allows them to forecast better the credit risk of the bank. This work on measurement of financial instrument, this early work, led to some very exciting collaborations and strong authorships, and two additional FT-ranked publications. In the first project, I worked with my very first PhD student, Joanna Fontes and Ken Pisnell. Joanna is now at Porto Católica Business School, and we continue to collaborate on several projects. In the second project, I worked with Greg Pavlina and our PhD student, Wen Lin, and Kathy Shakespeare from the University of Michigan. This project marked the beginning of a long collaboration and friendship with Kathy, as we share many, many common research interests. So in our next project with Kathy, we take a closer look at this type of measurement, the fair value measurement. And we provide a systematic overview of the institutional background of fair value measurement, both under international financial reporting standards and under US standards. And we document the extent to which firms in different countries and different industries use fair value measurement for their assets and liabilities. Also in this paper, we identify several areas in which additional research can further our understanding of what type of measurement and disclosure improves communication between entities and investors. This is a very well-cited paper. It was published in JBFA, and we were very happy to see that it inspired a number of accounting researchers to investigate issues in the area of accounting measurement. So it was very good. And also, while working on this paper, we also identified some areas that we would like to go and investigate further. So it was a really nice project. Of course, more projects did follow around the measurement of financial instruments. In some of those projects, in the first and the second I include there, we are looking at the effect of measurement choice and the effect of changes in accounting standards around the measurement of financial instruments on the comparability of accounting information. Accounting numbers are considered as comparable if two entities facing similar economic events report similar accounting numbers. So effectively, accounting comparability allows the users of financial information to identify and understand similarities and differences between entities. So examining what drives comparability, it is a very important question because comparability is important both for the investment decision, but also for regulatory oversight. So in the projects that I have already presented, the focus was very much on the financial statements. So we were focusing on how financial instruments are recorded in the balance sheet and how the changes in their value affects the income statement. However, financial reports also contain other information. They don't only contain financial statements. And this other information includes narrative disclosure. Some of this narrative disclosure explains the valuation methods, inputs, and assumptions used in measuring assets and liabilities. And this information is particularly important in the context of financial instruments, especially when the valuation of the financial instruments relies on unobservable inputs and internal models of the company. Disclosures on financial instruments are typically several pages long. So if you open an annual report, quite a big part of this annual report, it's narrative disclosure on financial instruments. And this disclosure was available for a long time. However, it was difficult to process. But with the digitalization of financial reporting, we have this has opened some new avenues for research. So we are now able to extract XBRL tag data directly from regulatory filings, and so we can apply machine learning and natural language processing tools to analyze this narrative disclosure. And this is precisely what we do in this part of my research, of course, with the help of some brilliant young researchers that they are experts in this field. In this part of the research, we investigate the properties of this narrative disclosure and how useful it is to investors. We provide evidence that disclosure around fair values triggered significant market reactions and trading activities. So effectively, we provide evidence that disclosure matters to investors. However, we find that those effects are not there when disclosure is not specific is not specific to the firm. So if the firms, they just provide disclosures using some standardized language, this doesn't help. Or when this disclosure is not specific on the fair value measurement. We also, in those projects, we also investigate what type of disclosure is useful for financial instruments that they are not measured at fair value. So we are looking at effectively at financial assets that they are measured at amortized cost. And what we look at there is what type of disclosure provides useful information regarding expected credit losses in the banking sector. And we highlight, that's a very nice project, because we highlight specific areas that the standard setters can mandate disclosure or provide clearer guidance in order to improve the informativeness of the annual reports. And in this moment, I would like to very much, so the first project that I have there is with Dimitris and Kathy, and the second project is with Sam, and I would very much like to thank Dimitris and Sam for their patience as I work to keep up with the technological advances. They are the experts. I'm trying to have some inputs, and I'm trying to learn. Dimitris was our PhD student at Lancaster University and is now an assistant professor at Maastricht. And Sam also completed his PhD at Lancaster and is currently working as a research associate on a project for which I secured a significant external grant. So in this project, we are exploring best practices for improving financial instruments reporting, including the part of the narrative disclosure. And we are very, very, very grateful to the Leverhulme Trust for their financial support on this project. Okay, through my collaboration with Kathy, I was offered a visiting position at the University of Michigan, where I spent my sabbatical in 2023. So that was exactly after I was promoted to a professor. Working in a world-leading business school and accounting department was, of course, a great experience. I have met some great people there. I had access to some fantastic databases and resources. And of course, I have worked on existing projects and started some new projects with Kathy. One of the papers that we worked while being at the University of Michigan resulted in another FD ranked publication. But I think what was the most important of this visit is that actually help us to establish a strong collaboration between the two institutions. We greatly benefit from the regular visits of Kathy at Lancaster University. And this is through the Distinguished Visitors Program. So we very much thank LUMS for the support on this. When Kathy comes to Lancaster, she provides great training to our PhD students. She provides feedback on the projects of our colleagues, co-authorship with colleagues, and she also hosts some of our PhD students at Michigan, providing visiting PhD positions. Of course, this greatly benefits their CVs and results in some outstanding placements of our PhD students. So, as I mentioned before, my work focuses very much on improving the communication between companies and investors. And I also examine the effects of financial reporting regulation on the decisions of the managers and the capital market participants. Therefore, my academic work drew the attention of the accounting standard setters and including the International Financial Reporting Standards Foundation. That's the IFRS Foundation. The IFRS Foundation establishes the International Financial Reporting Standards, which are the standards used in more than 140 countries. That includes all the European countries, Australia, Canada, South Africa, etc. So this is basically the international accounting standard setting body. My research was used to provide evidence to the standard setting process on whether accounting information on financial instruments produced under the IFRS standards helps investors to assess the amount, timing, and uncertainty of an entity's cash flows. And it was also used to provide evidence on the effect of changes in accounting standards on the comparability of accounting information, and as well as on the effectiveness of narrative disclosure to provide useful information. As a result of this, I was appointed as an external consultant to the IFRS Foundation, supporting the development of standards for financial instruments and related disclosures. And these are the IFRS 9 and IFRS 7. That's a great experience. And in this role, I work closely with the IFRS technical staff and also members of the International Accounting Standard Board on projects targeting the improvements of the standards. And I have presented findings in the public board meetings. These meetings are crucial to shaping accounting standards globally, and they are followed by regulators, preparers, and users of financial reports. And it was very, very rewarding to receive fantastic feedback from the regulators regarding the insight that our work provided to the standard setters. So, and this is also this is a process that is rewarding because you contribute to the process, but also you understand very, very well what are the areas that they're important and then where your research should go. What I'm working currently on. So, as I said, my focus is always on improving communication between entities and users of financial information. So the projects I'm currently working are, of course, around meeting investors' ever-changing informational needs. Interest in information about sustainability of a firm's activity, and particularly relating to the environment, has increased in the recent years. This need had led to the development of reporting standards related to sustainability, and we have seen an increase in the volume of information reported, either on a voluntary or on a mandatory basis. In the next project that we're working on, we look at the connectivity of those two types of reporting, of the financial and sustainability reporting. What we are looking effectively is two things. The first is we are looking at the connections between information and assumption used in these two types of reporting. And the second tries to understand the financial effects of sustainability-related matters, but also the effects of financial decisions on sustainability outcomes. So what we are trying to achieve in this project is we are trying to see how the companies should report in a way that they provide investors with a more complete picture of their activities. We are also looking in the second project, we are looking at the reporting practices for sustainability-linked financial instruments. What do I mean by this? Well, those are instruments with cash flows that they are linked on sustainability performance. These instruments are new, so also part of the financial innovation. They appear in 2017. And they are particularly popular in Europe. And if you look at the graph that I have there, there was an issuance volume of over 1.2 trillion US dollars in the period 2017-2024 in Europe. It is important to examine the accounting treatment and reporting of these instruments as they impact the income volatility and the capital adequacy requirements of the banks that they issue them. Those are basically loans that they're issued by banks, right? These factors can significantly influence the development of the market and the importance of the sustainability-related interest rate adjustments. So effectively, what I mean is banks, they may refrain from issuing those instruments or issue them with a significant interest rate adjustment related to sustainability in order to achieve a specific measurement and manage income volatility. Therefore, we can see that accounting treatment can have real effects, so accounting regulation can have real effects on the incentives of the borrowers to achieve their sustainability targets. So in this project, we are looking at what would be the best way for those instruments to be reported. And the second area that I am currently working on is related to the digitalization of financial reporting. The digitalization of financial reporting has transformed both how financial information is both generated, but also how it is utilized, how it is consumed by investors. And this is very important because now over 90% of global market capitalization requires some form of digital financial reporting. With this, financial information becomes machine readable, and investors can access and analyze this information efficiently, which can lead to improvements to capital market efficiency and reduce the cost of capital. However, the digitalization poses also important challenges, both for the preparers of the financial information, but also for the users. For example, it is costly to implement. There are data security and compliance concerns, and information is not easily accessible by all investors. So our work in this area aims to explore the best practices in leverage these digital technologies to enhance the accuracy, the efficiency, and the accessibility of financial information. Both of those areas, the sustainability, the one related to sustainability reporting, and this one related to the digitalization and taxonomy of accounting standards, are highly relevant to the international accounting policymakers. And we aim to continue being actively involved in proposing new methods and guidelines to the standard setters. So those are two areas that the standard setters are very, very interested in at the moment. And I think for the years to come. Of course, all these projects that I have described and the new projects that are coming would have never been possible without my great co-authors, except from the fact that they all look great. They are also very, very smart and great, very nice and great people to work. It's a pleasure to work with them. They are also coming from great institutions all over the world. And this brings important benefits, both to the department and to LUMS. And we are very, very, I am very grateful to them for all their inputs and all the work they do with me. And I think that more projects are coming. And with a lot of these people, I work on multiple projects, which is great. So being able to help shaping the international financial reporting standards is something that, of course, it's very rewarding personally and provides me with the reassurance that my research has strong impact. However, what it is also very important and probably more rewarding for me is to support other academics in developing research that is globally relevant, impactful, and financially viable. And I'm very happy that I work closely with many colleagues, either on joint projects or providing feedback on their work and supporting them with things like grant applications or the publication process. Also, through my roles as engagement director in the past and currently as the research director, I try to develop strategies to support high-quality research, publication process, and applications for research funding. well, I'm not always successful, but there are a few things that they work very well, and I'm really pleased. These include the distinguished professors' visits, helping to secure visiting positions in world-leading universities, capitalizing on existing relationship with funders to identify opportunities for funding, and facilitating and encouraging the collaboration with the industry and regulators. I am actually particularly interested in communicating our research with policymakers, and very keen to support academics in this. And recently I have been appointed in the Financial Reporting Standards Committee of the European Accounting Association. The European Accounting Association is an academic association with over 2,000 members from 60 countries. So, and the purpose of this committee is to bring contributions of academics to the standard setting process, to the accounting standard setting process. So this appointment makes me very happy because it will enable me to pursue my passion for policy relevant research, also outside Lancaster and outside my network of co-authors. Finally, a very, very significant part of my academic journey is, of course, teaching my smart and talented students. I am teaching in the areas of financial accounting and corporate finance. And I have been involved in teaching at all levels and the design of courses and programs. I have also contributed as an external examiner to a number of institutions, including the London School of Economics and Bayes Business School. And I have also developed a number of online courses for professionals. Teaching is something that I very much enjoy. I very much enjoy teaching, and I think I feel very happy in the lecture theatre. So the students are always one of the best part of this job, and they are those that they constantly motivate me to improve and drive a positive change in higher education. So I thank my students very much, and I want them to know that I enjoy very much teaching them. I think, yeah, that's it from me. So thank you so much for being here today. It was a pleasure to share my journey with you, and it was a very nice process to reflect of how things developed, what went well, what didn't go so well, and how things can be improved. So thank you very much for being here today and sharing this with me.
Thank you, Argyro. That was really wonderful to hear your story and to hear the journey of all your different papers as well and your co-authors. And I especially liked your final comments about your passion for policy relevant research, and also just how you were happy in the lecture theatre. So it's really lovely to hear that sort of full range of you as this rounded academic doing this world-class research, but also feeding into our classroom. So it's really wonderful to hear. So thank you. So I'm just going to open it up to the floor if anybody has any comments, if you want to raise your hand, or any questions, if you want to either raise your hand or write in the chat. I think the chat function is open. Is that correct? I can't actually see the chat.
I am not sure, Maria, whether people
here's Chelsea
can use their microphone, because it seems that the microphones are not able to speak. Yeah.
Chelsea, did you want to say something? Did your hands go up or did it go back down? And maybe Sonia can see if she can unmute people. So
yes, now it seems that it works. Yeah.
Chelsea saying she cannot speak. Sonia, could you look at that? Maybe while we're waiting.
And now it's okay.
Yes,
Maria.
It's okay now. Thank you for unmuting you. Just have a question. So first of all, I'm very proud of you, Argyro. I think as a lady, promoted a professor. Just have one question here. I think you talk about this sustainability reporting. What kind of the real impact would have at a company level? Would that help them, to improve their sustainability performance, or maybe better or maybe worse?
Did you get that, Argyro? Looks like Argyro's frozen, doesn't it? Oh,
sorry, I'm really sorry, Chelsea. I think that I lost the connection. So please, can you repeat your question? Really, really sorry.
Yeah. So my question is, I think you talk about the sustainability reporting, and then because it's a reporting, there's more information available. I mean, what would be the real impacts at the company level? Would that help company to improve their sustainability performance, or maybe the opposite? What's your thought on the real impacts on the company?
I mean, there are many things, right? So if disclosure, if you have to disclose information, this can have real effects on the decision of the managers, right? So this can be used to signal what your activities, etc. What we see on the connectivity of financial and sustainability reporting, we see it from the point of view of how well you provide information with investors around your activities. But I do agree that this also, the fact that you are required to report more, can have real effect, can have effects on how the managers take decisions in terms also of sustainability outcomes.
Okay, great. Thank you.
You.
Thank you. Do you else have any other questions or comments? I mean, what I found interesting, Argyro, was hearing you talking about the policy work, and maybe can you tell us a little bit about how you got access on how that came to be, how you actually came to sort of generate that policy impact. It's quite it's a thing that many people want to do, but they're not quite sure how to position themselves in that space.
Yes, of course. Yes, this is something that, I mean, going into the policy, into the regulators, it's something that it is not easy. It's something that you build through the time. In my case, what happened is that, I have, my research was very much looking at the effect of the accounting regulation. So when the regulators look at changes in the accounting standards, at which direction they have to go, they always look at how effective those accounting standards are and whether there are some issues, right? So my work was through the attention of the accounting standard setters. They have, of course, they look at academic research. So they have used this research in the standard setting process when they wanted to provide evidence whether something works or not. And then, of course, I was appointed as an external consultant to the International Financial Reporting Standards Foundation. And of course, I mean, in this one, it is something that that gave us access a lot to, how the standard process is going. And through this process, I was also able to involve some more junior colleagues in these projects. It is something that, especially, maybe some areas is a little bit different, but in accounting, it's something that you build with the time. But it is something that, and as I said, now I am a member of the Financial Reporting Committee of the International Accounting of the European Accounting Association. So what we are doing there is that we are in constant communication with the standard setters, and we create common workshops where academics present their work. The standard setters will present the view of the standard setting process, and through these people, participating in this, people can have access in this process. So there are things that they can come that we could do, and there are things that we could do to support people in this process. And this is something that I'm very passionate and very keen of implementing.
Yeah, no, and I know that, and I know that you take that very seriously, that sort of mentoring and capacity building and helping colleagues to sort of enter these new areas of work that are perhaps less familiar with them. So thank you for that.
And it's also very much fitting in our research, because if you develop, if your research is looking at topics that they're of interest to the standard setting process, it's also kind of it makes also easier the research to be published in top journals, right? So
No, I know
it's working two ways.
Yeah. So here we've got George Wang has made a point. George, would you like to speak to your question rather than me read it out? It's about AI and changes in financial reporting. Are you there, George?
Yeah, yes, Maria.
Hi.
Sorry, my side signal may not be very well here.
Okay, lovely to see you.
I thought it's a fantastic idea. Is connecting to all the policy making over there. Actually, it's one of the demonstration how our research is contributing to either policy making or day-to-day, industry practice. My question is, as Argyro is mentioning, this sustainability reporting. Important topic is AI. Is to become so creative in creating many things, but people are using a lot. So I can see in the industry there's many places are adopting AI to generating all this standard reporting, and they will be, because I was always curious to know, like the Enron case, which is professional accountant is cooking the book. I'm thinking in the AI stage, would they become smarter to AI cook the book? Then how would Argyro as a professional in accounting to see, is there any way the application AI in the future accounting world, do we see more risk? Do we see more benefits? How do we see this as a general thing?
I think the answer is both, George. There is risk and there are also benefits. I mean, AI regarding accounting information, AI can process this accounting information, right? If you are an investor, you can use it to process the accounting information. But AI likes information that is structured. So if you put unstructured information into the AI, you will not going to get a very precise output. So that's why digitalization and taxonomy of the accounting standards is very important, because then we can extract structured information. We are hoping that this will help to make the processing of the information from the investor's point of view more efficient, right? But this should also have effect from the preparer's perspective as well. I think it can be used to potentially help us also to detect any fraud. So it can be used for a good cause in that sense. But AI can help, but as I said, we need to be very, very careful of what type of information and how we provide the information. At the moment, AI works when the information is structured. And I think that's what the digitalization of the taxonomy actually of the accounting standards is doing.
Okay,
that's brilliant. Thank you, Argyro. Thank you.
Do you have any other questions or comments for Argyro? I think it's I think just I want to just speak on behalf of everybody to say thank you, Argyro, for such a fascinating presentation, and it's just really great to see how it touches on so many areas of our work in terms of our teaching, research and policy, engagement with industry, but also just to see the contributions you're making in taking your work into sustainability agenda, digital, etc. So really, really great to see. And I think I want to I've got a nice little plaque to give you, which I'll drop into you at some point in the next few days, but it's just really to mark and commemorate your inaugural lecture. So thank you. And I want to just sort of say a round of applause to you. I hope if we can just do our reactions of love, chat, applause. Thank you from all of us. Thank you everybody for coming and listening in this presentation. The presentation will be available to listen back on, and Sonia has also posted details of our next inaugural lecture, which is Costas Serviadis for Management Science on May the 1st. So thank you everybody. Thank you Argyro. Again, just wonderful to hear you speaking, and look forward to seeing many of you at our next event. So thank you everyone.
Thank you very much. Thank you.
Bye.